I'm losing my house. My neighbors are losing their houses. I don't understand. Don't the lenders want us to keep our homes?
Think like a gambler. A very wise gambler who really knows the odds. You always want to hedge your bets, right?
Of course.
Now, how do you feel about buying insurance?
That depends. What kind of insurance?
It's a hedge on a bet that you don't really need, but it's handy to have for feeding your greed.
Feeding my greed?
Some policies pay if a fire burns your house to the ground, or an earthquake turns your building to rubble, or a terrible storm turns your house to a puddle. In short, you get paid if you get into trouble. Now, suppose you get paid, supposing you do, when someone has trouble, but the someone ain't you. You don't own the house, you don't pay for repair. You're the investor.
That doesn't seem fair. If I'm the investor and these are the perks, I get paid when his house burns.
Yep, absolutely. That's how it works. You buy that insurance on any old bloke who lives in a house that sits in the mud at the edge of a river and pray for a flood. You buy that insurance on smokers who smoke, in bed in houses with old exposed wires and too many candles, hoping for fires. The bank makes a loan to a guy who is broke. They sell it for cash to replenish their vault. Now what if, just what if, that guy should default?
Poor guy. Then he's homeless. The bank would foreclose.
Now what if, just what if, you get paid for those?
I get paid when you foreclose. I get paid when you foreclose. So I'm at the racetrack, but this time I choose to bet on the horse that's most likely to lose. I would make 1,000 loans like those. Then buy that insurance and get rich, I suppose.
A credit default swap pays you when someone else has trouble.
Phew. I'd buy a credit default swap, I guess. Can I say a CDS?
Yes.
A CDS lets gamblers bet on loans that have not failed. Not yet. Banks make those loans and then hope for trouble.
That's why they call it the housing bubble. Now, repeat after me. When you hear the bubble pop,
When you hear the bubble pop
and housing prices start to drop,
and housing prices start to drop,
then a credit default swap
then a credit default swap
puts the hedge fund on the top.
You sign a note that says you have to pay a debt.
You count it good as paid?
It hasn't failed us yet, 'cause that guy buys the note, and this is how he bets. You pay him every month, and everyone forgets.
It's magic invisible, magic invisible, magic invisible money. Magic invisible, magic invisible, magic invisible money.
It's the richest source of riches since the savings and loan crisis.
Which wasn't a crisis for us.
Why bother saving when we can lend, lend, lend?